Hey everyone and welcome. Thank you for joining us for today's Meet the Analyst webinar, U.S. Holiday Predictions Unwrapped. I'm your host, Blake Drosch, Senior Analyst at Insider Intelligence in New York City, and I'm here with my colleague, Principal Analyst Andrew Lipsman, who is joining us from Chicago. Hey Andrew, it's great to have you here today.
Hey Blake, good to be with you.
Before we get into the main presentation, I'd like to thank Criteo for making today's webinar possible and to welcome Rory Mitchell, the General Manager of Global Growth at Criteo. Rory is also joining us from New York. Hey, Rory.
Hey, Blake. Thanks for having me. Good to see you.
Oh, thanks for joining and hopping on. A few things before we dive in. We have a ton of information to share, but there's no need to take notes. We're going to email you a link to view the slides and the full recording, but we do want you to participate. So just use the chat window on the right to submit questions at any time during the presentation, and we'll get to as many as we can during the Q&A. So with that, let's get started. Andrew, what's on the agenda today?
Hey, Blake. Okay, so let's dive right in. So we're going to start by talking about our holiday season forecast and what is behind that forecast. And I'll unpack different channel trends alongside that. Then we'll get into Cyber 5 and some of the key seasonal trends driving the holiday season. We'll get into some specifics about retailers and categories that will be the winners this holiday season. And we'll talk about some interesting holiday marketing trends and wrap it up with some holiday predictions. So with that, let's talk about our holiday season forecast. I'm going to provide a little bit of a backdrop here and how we kind of understood what was happening in the economic environment and consumer spending that ultimately went into our forecast. So there are a lot of tensions playing out. We're seeing a lot of cross currents, some negative headlines, some maybe surprisingly positive headlines. So I wanted to take you through some of the tensions that we saw and how we kind of grappled with those and which ones we kind of came out more in favor of. So the first tension is obviously rising inflation, right? You can't go anywhere without hearing about it. It's rearing its ugly head this year. But at the same time, consumers are still pretty flush with cash. The labor market's strong. We have almost record low unemployment. There's been rising wages. So there is actual spending moving around the consumer economy. Of those two, the bigger factor, I think surprisingly so, is actually disposable income. That is going to be a bigger driver of the top line growth rates. Now, there's some nuance to it because it obviously incorporates inflation into that number. But broadly speaking, that was a bigger factor. The second one is there's a pendulum shift between kind of demand for experiences versus demand for retail goods. We saw a huge influx of spending on retail goods the last couple of years. Now, as people get back out into the world, we're seeing it shift back to experiences, travel, dining out, events, things of that nature. In this case, I do think that the shift to experiences will cast a little bit of a shadow on the demand for retail. The third one is product demand versus product availability. So in the past couple of years, there's been a lot of out of stock. So even products that people wanted, they couldn't get, and that may have caused there to be a bit of a haircut on consumer demand. This year, we think product demand will be the overriding factor. Product availability, while it's still an issue, it's much less so. It's really been tempered. So it's just not going to prevail like it did in past seasons. The last one is the longer calendar versus promotional day fatigue. We have a lot more promotional events. It may just be too much for consumers. But we do have this really kind of long, protracted calendar from mid-October into Christmas that represents ultimately a lot more potential to spend on holiday gifting. And so we do think that the longer calendar will ultimately help drive incremental demand. So just to unpack a little bit more around inflation, this analysis is actually, I liked it because it looks across a lot of consumer spending categories, and it asked how respondents felt about whether this was a spending priority and then what percentage of them were looking to cut back. And then I just did some of my own calculations to see what was the net positive or negative on those factors. And you see that up at the top, the net positive, the spending priorities, these are all sort of non-negotiable essential categories: groceries, gas, rent, mortgage, healthcare, household goods. Those are the ones where budgets are flowing in that direction, and then away from discretionary goods at the bottom of the list. Holiday categories, apparel and home decor were near the bottom, and both of them had minus 25 net rating in terms of cutting back, and home decor minus 15 net in likelihood to cut back. So that general sentiment towards discretionary goods will weigh on consumer spending patterns. We also saw an experience, as I mentioned, consumers are wanting to get out and do things like dining out or going to events and getting on vacation again. But I do think they'll temper how they do it or be more selective about it. Probably means that those growth rates still will be positive as the pendulum shifts in that direction. But maybe they'll just be a little bit more deliberate about that spending during the season. Okay, so let's talk about our forecast. We are forecasting 1.3 trillion in spending this holiday season in total retail. That's up 7% from last year. Now, you can see over the last 3 years, in fact, in 2020, we had a 6% growth rate, then really kind of unprecedented, and I don't throw that term around loosely. It was certainly overused in past years. Unprecedented 15% growth in the 2021 holiday season. Might also tell you why we ran into inflation this year. People were just spending a lot. This year, we're still expecting a pretty strong, upper single-digit growth rate of 7% overall. Now, the caveat to that is that it's almost all going to inflation. So people aren't getting more for that 7% increase, but a lot of how retailers are measured does ultimately have to do with the growth rate. So there is a foundation for positive and even strong top line growth for holiday spending. If we look at holiday e-commerce, we're going to see about 240 billion in spending this year. Going back to 2020, that's when we saw the really dramatic 38% increase in spending that year, about an incremental $50 billion in e-commerce spend in 1 year alone. Last year, we saw that moderate as things shifted back in the direction of brick and mortar a bit. So it was only a 10% growth rate. Now we're seeing that tick back up a bit to 12%. So certainly an improvement. We've seen e-commerce come a long way in a short period of time. It's basically doubled in 4 years' time. So continued channel growth, but obviously, it can't grow at these really exorbitant rates after that 2020 that it had. If we look at the channel growth rates for total retail e-commerce, and then brick and mortar, that's the one in gray, we can see what those look like. So obviously that dramatic gain for retail e-commerce once again. The brick and mortar or non-e-commerce retail growth rates jumped to 16.5% last year. So that's why we had that really dramatic increase for the total season, even though e-commerce was a bit softer. This year, that's coming back down to something more normal at 5.9%, but that's still really, really elevated by historical standards. You can see the preceding years, brick and mortar was growing maybe 2-3%, sometimes less than 1%. So that channel remains very strong. If we look at the channel breakdowns a bit here, I'll just call it a few highlights. So up at the top here, so first off, brick and mortar is going to see its first ever $1 trillion season on its own. And it's going to account for almost 82% of total retail spending for the holidays. And usually the growth contribution is something south of 50%, but this year, because that channel is so strong, it's going to account for about 70% of that total growth contribution. So if you're not doing well on brick and mortar, it's going to be harder to grow on the top line this year. In past years, mobile has really been a disproportionate growth channel, even though it's the smallest of the kind of three primary channels. It's always had the fastest growth rate. That's true once again, 13.7% growth, representing 8.6% of holiday spending, but a disproportionate almost 16% of the growth contribution. So mobile is an important channel, a bit less so this year as things recalibrate back more in the direction of brick and mortar, but certainly a channel that has really critical importance to how well you'll do in the holiday season. All right, let's talk about Cyber 5 and seasonal trends. So here we are on October 20th, and guess what? The season has already unofficially kicked off. We had the Prime Early Access sale last week on October 11th and 12th. So this is the second Prime Day, and really, it was an event to, I think, serve several functions. One, to kind of get people shopping early. We've seen that happen in the last couple of years. They first did this in 2020, and it really opened the gates to a lot of e-commerce spending. Last year, Amazon kind of dabbled with a beauty style haul event. It was a single category. It didn't make much of a dent in the holiday in October, so it didn't kick it off in the same way, even though the consumers were primed for earlier shopping. And this year, just like other years, what you see is counter programming against Amazon's big tentpole event. So Walmart had a competing event, rollbacks and more, basically over the same time period that Prime Early Access sale was. Target actually tried to kind of Bigfoot Amazon with an earlier event, October 6th to 8th, Target deal days. I just don't know if it's going to have the same impact that Amazon has to kind of create an industry-wide event. So I still consider the Amazon event kind of the unofficial kickoff to the holiday season this year. Bank of America did put out some estimates on how well it did, about $8 billion in sales, which compared, it was a bit less than the July Prime Day event that they reported about $10.7 billion in sales.
Hey, Andrew, quick question. We have seen a lot of reports in the media labeling this as sort of an underwhelming event because of that comparison. But if this Prime Day was meant to kick off the holiday shopping season, we won't really know its full impact until we see how Amazon did throughout the entire season overall, right?
Yeah, I mean, we'll get a better sense of how it helped their quarter specifically. It's funny, the reaction, it's like a Rorschach test to see how people react to a number. When I first saw the report of $8 billion in spending, my first reaction was, oh, that's pretty good. Because a typical day for Amazon in October would probably be somewhere in the $1 to $2 billion range. So it's like several multiples higher. That seems pretty good. And I don't know if the benchmark of comparing it to Prime Day, which by the way was only 3 months ago. So people may have already gotten some of that frenzy out of their system early on. And also, I just think the products that they were offering, there was a lot of getting rid of inventory. So I don't think this was their best products. It was about kicking off the shopping season and getting people thinking about what they're going to buy over the course of the rest of the season. So I think a lot of the value is residual over the longer period. So I have to talk about out of stocks. There's been so much concern about this the last couple of years. And I like this chart that Adobe put together last year about basically, how big of an issue were out of stocks on e-commerce orders. And you could see how much it ticked up from kind of 2019 as the benchmark to 2020 in the heat of the pandemic. And then it got even worse, about 4 times higher than the pre-pandemic benchmark in 2021. It's starting to get better though. They're out of stocks are still elevated, but it's improving. Consumers, I think, have learned to get ahead of their shopping. So they're still going to exhibit that behavior of early shopping and getting ahead of out of stocks. But it's not quite as pronounced as it was the last 2 years. So some things really are improving. And, those positive storylines, I think, don't get reported as much. So this early holiday season that we've seen now, so this is really going to be the 3rd year of it in a row. At that point, I feel like we've created a real habit around it. It's starting to become entrenched with the consumer. Here's what it looked like last year in terms of the peak season. I love this data from NRF because they looked at number of digital shoppers on all of the Cyber 5 days, both online and offline. And you can see that Thanksgiving was the single day that really just, the change in pattern blew a hole in that. Stores weren't opened. You see a huge decrease in store traffic, but also it eroded digital shopping. Black Friday, it also kind of took the wind out of its sails, especially in store. And you basically see declines across the board for all of these days, but it's really most pronounced and most concentrated around that Thanksgiving and Black Friday period. So early shopping and early Prime Day, all those things are pulling shopping forward and eating into demand. Cyber 5 specifically. So I've covered the holiday season for a long time, and every single year, Cyber 5 gained share of holiday season sales. Every year, Cyber Monday grew above the overall season benchmark. There was just more and more concentration of activity around those tentpole days. And that kept ticking up every year until 2019, peaking at about 20%. Then 2020 changed things. Early shopping pulled demand away from Cyber 5. And you saw that it started losing share. And that happened again last year, and now we expect it to further erode down to a relative low of 15.6% of total season sales this year. So what does that look like specifically for the individual days? You can see across the board here, all of these days, you can see their growth rates in parentheses, very low single digits expected. Won't even be surprised to see some declines, but this is where we're at. So each day, there's still big days. Thanksgiving, Small Business Saturday, and Cyber Sunday are all over 5 billion in sales. So pretty heavy spending patterns on those days regardless. But Black Friday and Cyber Monday are the big ones. Black Friday, we expect to have the slightly biggest growth rate at 3.9%, just under 10 billion in sales. Cyber Monday, just under $12 billion in sales. It will be, once again, the heaviest shopping day of the season, which it has been ever since 2010. Once we get through that period, then we have a couple of weeks of heavier spending. And then once we get to about mid-December, that spending starts to taper off on e-commerce quite a bit. But the last 2 weeks of the season where we will see those dollars flow in e-commerce is to click and collect, because people just get more concerned about getting deliveries on time. So who does that benefit? Big box retailers. I just love this data because it really highlights how important click and collect is as a share of the e-commerce business for some of these top big box retailers. You can see Lowe's and Home Depot, they're highly dependent on it. Over 50% of their sales come from click and collect in e-commerce. Best Buy, Target, Walmart, all up around that 40% range. Macy's, Nordstrom, others also have significant percentages. So click and collect is a really critical driver of late season e-commerce sales. Let's talk about retailers and categories now. So we expect the top holiday e-commerce categories to basically be in grocery. Everyday essentials, which are not typical holiday categories, are where we're seeing and expect to see the fastest growth, both because those channels continue to move into e-commerce, but also because inflation is rearing its head most prominently in those categories. So we expect them to both grow at over 20% year over year. Every other key holiday category is going to underperform the 12% e-commerce growth benchmark. Toys and hobbies should hold up the best at 11%, apparel and accessories just below that, and then computers and consumer electronics at around 9%. So a bit of softness in all those categories, but they'll still do all right. When I think about what are the kind of key themes or segments of retailers that will be the likely holiday winners, the first one, Amazon, I have to give it its own category. It does stand alone because it has the ability to do Prime Day. And also, by the way, is the big beneficiary of Cyber Monday when that promotion happens. So I think Amazon has started to recharge its e-commerce business after a tougher first 2 quarters of the year. They're getting some things moving. And so I think that they will be a big holiday winner this year. Then, some prestige brands, we're seeing the bifurcation of consumer spending, and affluent consumers are still spending on luxury and other prestige brands. So expect that Apple and Nike and Lululemon will continue to hold up well with their growth patterns. Patagonia is another brand that I think will benefit from a brand halo because of their announcement of how they're basically funneling their profits into preserving the environment. I think consumers will look well on that. On the other end is discount mass merchants. Costco, Walmart, Dollar Tree, any dollar store really should do well, as a lot of consumers are looking to trade down and save a buck here and there. And then lastly, beauty and cosmetics has been kind of a strong pocket of demand as people look for more affordable luxuries. So I think that will do particularly well this holiday season. Ulta and Sephora, the big beneficiaries. Holiday partnerships are always interesting, and those can give a little bit of an added boost to some retailers. So I thought Peloton selling through Amazon, and they did a big push on discounting their devices on Amazon during the Prime Early Access event. So I think that's an interesting one to watch, and maybe an interesting one to watch going forward, because D2C brands historically have resisted selling through Amazon. I think that's going to start to become a bigger trend in D2C in 2023. Then we saw some really strong toy brands partner up with major retailers. So Toys R Us is getting kind of a revamp or a relaunch as a shop and shop concept in close to 200 Macy's. So I think that will add a little flair to Macy's and department store shopping this season, and then FAO Schwartz partnering with Target to add what I think is already a fantastic toy merchandising experience in Target. So let's look at the top e-commerce site trends. So I'm looking at July data in terms of unique visitors to the top 15 e-commerce retailers, and then comparing back to July of 2021 and then also July of 2020 to get a little bit of a longer term view on how they've been growing over the last few years. So Amazon and Walmart head and shoulders above the rest in terms of traffic. Their growth trends can continue to hold up well. Amazon maybe gets a little extra boost here because it was comparing to Prime Day this year where it didn't have that in the prior year. That said, I compared it against similar quarters, and Amazon's been growing steadily across other quarters as well. So it's doing well. Etsy jumps into the top 5. I think easy to overlook Etsy, but they continue to do well and maintain really their pandemic gains because they skyrocketed up and they've held that position really ever since. Ticketmaster, you see some really gaudy gains going back to July of 2020 when nobody was going to events. People continue to get back out to events, so it's jumped up into the top 10. And then Shein is another one to call out. Crack the top 15. You can see both the 1-year and 2-year growth trends are really strong. And importantly, displacing some traditional apparel leaders, department stores like Macy's, Nordstrom, and Kohl's. A couple of them, I think, were in the top 15 last year and no longer are, having been supplanted by Shein. So fast fashion continues to take off, at least with this particular brand. All right, we'll wrap up here talking about some of the holiday marketing trends. So the first one is promotions. We've talked quite a bit about Prime Day and what that meant for the promotional season. But again, this is really within the backdrop of inflation and the fact that we really have a renewed discount-seeking consumer that we have not had in the past 2 years. Last year in particular, Adobe had put out some data saying that the overall discount rate offered by retailers was just 9%. The prior year it was 14% on average. So consumers were just paying a lot less in terms of receiving discounts during the holiday season last year. That meant better margins, more profits for retailers. That's not going to be the case this year. If you want to move product, you have to provide a discount and also be price competitive with other retailers and brands that are selling the same products. Almost everybody is affected by inflation, and it will factor into their decisions. Only 16% in this survey said that inflation had no impact on their Prime Day 2022 purchases. Search and retail media. So we're also in this environment seeing maybe a rationalization of marketing and advertising budgets, maybe cutting some of those more pure branding dollars in favor of performance ads and the ones that really have a tight closed loop on performance. So that's traditional Google search and then increasingly retail media on Amazon and other retail media networks. There's a flight to certainty. It's just much easier to put that spend in when you say, I'm going to invest $1 and I'm going to get $4 of return on ad spend through these channels. It's much easier to rationalize that decision than to say, I'm going to spend a bunch of branding dollars, even though branding works and it has a big impact. I'm still a big proponent of it, and I think it actually helps drive conversions on bottom funnel ads like this, but it's easy to see why dollars are going to flow in this direction. And on the retail media side, this chart's actually looking at some recent improvements to Walmart's search algorithm, and you can see it almost immediately paid dividends. It caused its cost per click to actually go down, which maybe is not to the short-term benefit of Walmart, but as a result, it actually helped brands invest more, in part because they're getting much higher return on ad spend. And you could see it actually vaulted ahead of Amazon and Instacart during that second quarter this year.
Hey, Andrew, as the holiday season gets longer, how should advertisers with more conservative budgets be prioritizing their spending during these various tentpole days over the season?
Yeah, I mean, I'm a proponent of an always-on strategy, but that's not always easy if you have to make some tough decisions. It may mean pulling budgets from elsewhere. So this is always hard to rationalize. I will say it's smarter in general to concentrate around the tentpoles. Even though it gets more expensive around Cyber 5, the return on ad spend during that period also tends to go up. So you can have more confidence spending into that period of time. And then you also maybe get some residual benefits in the days and weeks after when spending still remains high. If you didn't have to clear out a lot of inventory, I would say maybe you didn't need to spend a ton of ad dollars going into the early access sale. Every brand needs to figure out what's right for themselves, but those are some ways that they should maybe think about it. Social ads, so social and other upper funnel brand display and video ads have been really disrupted by iOS changes and other things that have disrupted targeting and measurement. That's obviously affected the return on ad spend calculation and how you think about ad performance. So what we've seen this is a cross section of D2C brand spend, is that more dollars are funneling towards Google because of, again, this flight to certainty and away from Facebook, but also moving in the direction of some other channels, other digital channels, namely TikTok, or offline channels like moving dollars back into TV or even direct mail. So this is kind of what's happening with budgets today. But I think when you lose that signal to be able to target the right people and measurement on the back end, budgets are looking for some other places to go or how to diversify that spend. Social commerce, we get a lot of questions about how to think about social commerce, how to invest in social commerce. Should they get into live streaming? And what I would say is we did some research. So first off, social commerce is a fast growing segment of e-commerce. It's growing 34% this year to almost 30 billion. It's about 5% of total e-commerce sales. So it's not a huge portion of the market, but it does matter. And TikTok is a big growth driver in that number. What do consumers want in terms of checking out on social commerce? There's a friction point with returns and customer service, like the basics, the basic blocking and tackling that you get through an e-commerce site, you don't get as easily through social commerce. So it does prevent a lot of spend that people might want to transact. What is not important to social media users for social commerce? Shopping on live stream, augmented reality, try on. These are nice to talk about, but I just don't think they're moving the needle in a big way for most brands today. There are exceptions to the rule, but in most cases, I think they're more of shiny objects than big drivers. Last one is mobile apps. I talk about this a lot every year, but it's so important because mobile has this disproportionate impact as a channel. Retailers need to actively market their apps, get on people's phones, get in the consideration set, stay top of mind, and do it by marketing the benefits that consumers want your app for. So some of the top ones are when they go into the store, they want easy ways to redeem coupons and deals. They like checking inventory availability. We know this out of stock issues continues to be top of mind, even if as it gets better. So think about how you market the benefits of your app to get it onto people's phones when it matters most. Okay, wrapping up here with some holiday predictions. So I actually originally made these predictions back in February, but I'm going to revisit them because I think they largely still apply. So the first one was that Amazon will host an October Prime Day. I'll give myself a nice check mark for that one. That has happened. The reason, why did Amazon do it? Because they can. They've really been testing out multiple tent poles. They just haven't kind of gone all in with 2 Prime Days yet before this year, but they had every reason to want to do it this year. So it shouldn't really be surprising that they did. Doesn't make things easy for marketers who are trying to figure out how to spend across, multiple tent poles. But in some regards, it was almost obvious that it was going to happen. The second is that Target will take the lead in making Thanksgiving store closures permanent. They drew a line in the sand last year saying, we're closing our doors this year and forevermore. Others have been a little bit more hesitant to say the same thing. But now we're actually starting to see that happen. So Walmart just this week said they're closing their doors again this year. And one of their executives said they expect that to be the future. So maybe not the same level of commitment as Target, but it seems to be leaning in that direction. Best Buy also closing their doors. Once those three do it, everyone's going to follow suit. So I think that, Thanksgiving store openings may be a thing of the past. Peloton will mount a strong holiday season comeback. This is one where I will say Maybe a little bit more wrong on this one, but maybe I will say they will limp to a holiday season comeback. The business is not in the best place that it's ever been, but I think they're doing some things they need to do, selling through other channels. Amazon, I mentioned, but also Dick's Sporting Goods. They need to grow the brand and start driving sales. They also just introduced their new rowing product. So I think there are some signs of life there. We'll see if they can start to reverse the recent trends that have not been so favorable. Fourth is that Walmart will ride low prices and Walmart Plus success to market share gains. I think that they continue to be front and center in this environment. Walmart Plus has about 16% adoption at this point, according to some of our research. And I think that's pretty good, right? Everyone wants to compare it to Amazon Prime, which has 60 to 70% penetration. It's not Prime. It's only 2 years old, but I think it's getting off the ground and giving consumers reason to spend more of their share of wallet with Walmart. And then lastly, the Toys R Us reboot. I think we're just going to see this broad wave of nostalgia-based holiday marketing. There's all sorts of forms of nostalgia, but I see it in the toy aisle everywhere. Some of my favorites from the 80s, He-Man, Star Wars. There's been a reboot of starting lineup action figures. Those were my favorite as a kid. All this stuff's coming back. So I think that's going to, cascade across the toy category and maybe even bleed into other categories. And that's it for me. So with that, I'm going to pass it back to you, Blake.
Wow, thanks a lot, Andrew. That was really great. Before we get into your questions live, and we've got some really good ones so far, so please keep them coming. I'd want to introduce and bring back our special guest from Criteo, Rory Mitchell, who is the general manager of global growth. Rory, we've got some questions for you, and we'll jump right into the first one. So tell us about what are some of the consumer behavior trends that you're seeing when it comes to holiday shopping, and how has this shifted over the past few years?
Well, first I'd say, Andrew, that was an awesome deck. I loved seeing all of that super cool data. I would say we back up a lot of this in terms of what we see, from our customers who are obviously, watching these trends. The earlier shopping trends are absolutely in full swing. We've seen that as early as July. We have a lot of data that says and points to holiday shopping happening in summer, which I think is like an indicator of some of the things that Andrew was talking about in terms of like what's to come, in terms of like Black Friday, Cyber Monday, not only for this year, but for years to come. So I think that's something to watch out for. Last year we were still, kind of in the thick of COVID and didn't have full store openings. So we saw a much shorter purchase cycle. This year we see something a little bit longer. So like from, obviously a day to as long as 2 months in terms of the way that a consumer considers and then ultimately, transacts. E-com is still booming. We still see a huge pull towards e-com. Last year we were talking at this exact same time and we were, really banking on the return to store. Frankly, we didn't see too much of that in our data from last year, but we absolutely see that happening. And, that doesn't mean e-com is taking a dimmer light. It just means that store is absolutely, in full force. The other one that's in full force, which I think, Andrew touched on just briefly, is travel. Our last year it was more local travel, much more like an Airbnb purchase or a VRBO kind of vacation. And now it's full international hotel, airline international. So we see a big swing there. It'll be interesting to see what happens in terms of consumer spending, in terms of gifting as it relates to, trips around the holiday, et cetera. But again, we still believe, and we see just because, we work with so many retailers and so many D2C brands, Black Friday, Cyber Monday is going to still be big. We do see some of the foundational challenges that Andrew talked about, but it's still a huge focus for us, and the consumer in my mind's eye is also, I think they're much more demanding of a deal. They're really looking for, the discount, the promotion. And I think it's interesting to see how brands are reacting and responding to that this season. So those are some of the things that I think are, staying the same, and then some dynamics that have shifted over time.
Thanks. So what strategies do you expect to see more of or maybe less of from advertisers?
Well, you can't talk to a retailer today without talking about retail media. The rise of that discipline it's super cool to see. Retailers wanting to monetize their data. I think there's more engagement around that this year, and we'll see more of those tactics, in this holiday season, and even more so to come. So I think that's a I think a big one. The other one is, as I think last year we talked about, and we've been talking about this for a while, right? The looming cookie apocalypse, has really, I think in a good way transformed the thinking of advertisers. They've really spent more time activating first-party data in a much, much more measurable way. That's a huge strategy that's coming from this. And then the other piece is acquisition. So the non-buyer category, the prospecting, just a heavier focus on that, a heavier weight on that. Not that retargeting is going away, or that, that lower funnel retention play isn't super important to the advertiser. It's just, I think there's much more of a balance and measure of how those two work together. Omnichannel, I think, is still very big. We had a strong push on that, how we drove more of the online shopper into the store for the obvious reasons of what was happening in COVID last year. But we still see a huge opportunity to take, a loyal online shopper and push them back into the store and make them a loyal, in-store shopper. So it's a different sort of change of tides in that regard. And then I think Andrew said it well. The buy online, pick up in store. It's here to stay. It's something that every single, one of our brick and mortar retailers are executing with us.
Thanks. So yeah, I mean, like you said, each holiday season in recent years has, certainly presented the market with some challenges. What do you recommend to advertisers who are looking to make the most of this holiday season, given the current climate?
Yeah, I mean, listen, the climate is tough, but there's still disposable income from the consumer. How and when they spend that is important for all of us to understand, and being more strategic about how you message to them, given that I would say more critical spend pattern. So that's one piece that I would always recommend. I think, just going back to my earlier comment, I think the majority of the brands and retailers and sites that we work with are having a much more, I would say, open mind to discounting, to deals, and against products that they normally wouldn't discount, right? I think having an offer and an opportunity for every type of purchaser is more the mindset that we see, this time around. I think the one piece that I would say is an opportunity is to, outside of the travel brands, it's the retailers looking to market to those travelers, both in the middle of holiday but post-holiday, where a lot of that will actually increase and vacations are getting booked. So I think it's important to really remember to focus there. We'll see a surge in that, actually, from the data that we see. We'll see a surge in that at the end of the Christmas holiday, the New Year's holiday. So it's important to watch out for. I think the categories that Andrew mentioned are really spot on. CPG, home goods, food, a big opportunity that I would focus on. I would say the underpinning to that too are just two things that I think are just important. Just making sure that the internal insights you gain around shopping behaviors or consumer behaviors, within the holiday season, just making sure you capture those and use those for the future. And then the last thing, which I think, is a little more centered around us as Criteo, is lean into your partners, be more open about what's happening, both good and challenging, and they can help you. Like we sit on top of almost 25,000 customers, and we can often help our customers navigate, even if it means, looking at, how they're spending across other platforms or agencies or tactics. And that's just something I think that would be helpful.
Great. Thanks, Rory. So we've been talking holidays, and real quick before we wrap up, how can advertisers take what they're learning from their seasonal campaigns and apply those insights beyond the holidays?
Yeah, I mean, I think, right now, advertisers are going to enjoy a lot of new customers, which is awesome. This is the time to really capitalize on attracting and converting, new customers and making them loyalists, spending time to understand how you take those, these consumers may be one-time purchasers, but that's an opportunity to make them, 2, 3, 4-time purchasers and make sure you focus on that. Again, I think the travel surge is something to be very, very eyes wide open to as it relates to what would happen in Q1 or Q2 of next year. And on the New Year's piece, just to go back to that for a second, I think the one thing I always recommend is a heavy up on the retention tactics, post holiday, which sometimes get left behind because Q1's tough. There's a lot of discounting of product, trying to move inventory, and I think there's a lot of anxiety around how brands and retailers and D2C do that. But I think what I've seen is, our customers who can really find a way to drive retention in a heavier format in Q1 actually have a much better trajectory into the holiday, which, they start planning in literally 6 months, which sounds bizarre, but it's very true. I really believe, and we didn't really talk too much about this in Andrew's section, but I really believe Black Friday, Cyber Monday will take a definite shift in turn over time. So I think it's really important that, advertisers, they prepare for that. They prepare for, a different purchasing journey along the holiday season. But I think a lot of what they do now helps them figure out what that's going to look like.
Awesome. Thanks, Rory. So now let's bring Andrew back in for the live Q&A, and Rory's going to stick around with us. We've got some great questions, so let's hop right in. So Amazon made some news this week. They're going to have a NFL Black Friday game next year, which, for anybody in the advertising business knows that this could have enormous implications. Do you think that this will affect any shopping patterns on Thanksgiving weekend?
Oh, that's a good question. So we've never seen anything like this before. And my first thought when I saw this article was, is this the most valuable ad space of all time? I mean, right? Like we think about the Super Bowl for advertising, but that's really more brand building. Whereas here you're catching people with that really high profile event at the same time that they are going to be like locked into that mindset of shopping. So the ability to convert is amazing. And I think it just plays into like this amazing advertising apparatus that Amazon is currently building. So I think it's going to be interesting to see how it plays out. Does the football game compete with Black Friday shopping? Yeah, it's gonna to some extent, but can it also drive Black Friday shopping or drive more shopping online on Black Friday? I think that's probably going to happen. It's definitely a new and potentially disruptive dynamic.
And then jumping back to this holiday season, another sort of unique sports related angle. We've got a question. Do we think that the World Cup is going to have an impact on the holiday season at all?
Rory, are you a soccer fan? I'm not a soccer fan, but I'll take a guess here. I mean, listen, it's going to capture people's attention. So it's almost the same thing as the prime football. Does it take people away from shopping? Yes, it could. Does it also open up the possibility of great marketing opportunities to play into something that's very, very resonant? I love big brand campaigns. Like I think we've lost a lot of that as TV gets fragmented, but these events that bring everybody together are really powerful branding opportunities. So I think it's a great opportunity for the biggest retailers to play off of that.
I see it the same way. It's both a risk and an opportunity in my view. I think for retailers who view it as a risk, we're seeing this right now. They're having to plan around it to really plan how they may mitigate some of the risk. And then there are some, to your point, that I think are going to be very opportunistic. It's really going to depend on the audience and the retailer, in my view. It'll be interesting to see, is what I would say. I am not a soccer fan, but this part of the advertiser side will be interesting to see how it plays out.
Well, doesn't look like we have any soccer fans on this webinar, so we hope that was a satisfactory answer. So how do we think department stores and other mall retailers will do this holiday season?
I think they'll hold up okay, in the sense that foot traffic and brick and mortar is continuing to do relatively well. I still think they're kind of caught in that middle segment of retail that is experiencing ongoing decline. So I don't think they're in like a great position. The one I'll say that I'm looking at closely is Kohl's, which I think has in some respects been in a little bit tougher position than even their competition, but they're really leaning into the Sephora partnership. And in fact, the Kohl's near me has it literally says Kohl's plus Sephora on their sign. And you walk in and it's a huge Sephora. So beauty is going to do well. That could be a big draw to bring people into Kohl's, and they can benefit from that additional foot traffic.
Thanks. And here's another one that we've got. Why is holiday spending now moving earlier when retailers have been doing early holiday promotions for years and years?
Single word answer: tent poles. You need coordination to make things happen en masse. And so any individual retailer can do a little promotion. You're just not going to get a mass consumer response to it unless you're a really big name. And frankly, even for some of the big box retailers, they can't shift the whole industry. It's Amazon and maybe Walmart are fairly unique in their ability to move how the whole industry moves. And that's what we have now with a mid-October Prime Day. And then everyone else gets into the industry-wide event. Prior to that, you really had it where most shoppers just did not start that shopping journey until right around that Thanksgiving weekend.
And here's another really interesting question. This is a good one. More discounting and an extended holiday shopping season. How will this impact returns management for retailers?
This is we've been talking about this a lot, about how returns and reverse logistics is probably a big area of growth, a big pain point to solve for shoppers, but it's really pronounced. If you think about the typical return policy, it's 30 days, but you're buying holiday presents in October. How does that work? That's a big disconnect, right? So I think a lot of retailers are realizing you have to extend that window, to, let's say, at least 60, probably 90 days. Walmart actually just announced some new returns offerings where I think they're allowing anything bought after October 1st, you can return it until January 31st. So they're going to have to think about how they take the friction out of that returns process. If you want people to buy early, don't give them a reason not to. And if you just have a 30-day return window, you can't do that. It doesn't make sense.
Great. And which retail media networks provide the best return on ad spend for brands looking to diversify their holiday ad budgets beyond Amazon?
Is this a trick question for me?
You can answer honestly.
Criteo. Criteo. I think that's the answer.
Andrew, anything to add?
I'll say, well, Criteo, you work with a bunch of partners in the space. I mean, I think what's this moment in time, right? Like everybody kind of started by flooding into Amazon as a retail media network, and it's gotten more price competitive. It's still driving returns, don't get me wrong. But there's kind of a growing opportunity as other retail media networks start to get their legs under them. We saw that example with Walmart. I think that's a pretty extreme example, but I do think a lot of them are finding ways to improve the return on ad spend. So I would just say it's going to be different for any category. You're going to have ones you will want to focus on, but look to the next tier after Amazon, or even if you're on 2 or 3 retail media networks. do some comparisons across networks. I will say this: if anybody has the data of average return on ad spend across all the networks, please send it my way. I'd love to see it.
Great. Well, last question for you guys before we wrap it up. If advertisers should only focus on a few tactics heading into the peak holiday shopping season, what should they be?
I mean, I don't personally think you can focus on a few tactics. I think you have to go big, and I think that's the sort of the challenge. But I also think that's the important focus. I mean, I also believe that, and I think we talked a little bit about this when we were doing this webinar last year. But I think it is important for advertisers to test and learn, even in the challenging environment of what is holiday. So I always recommend that. I think the other piece too is really being top of mind of your competition. Understanding how they're leaning in, the promotional, the discounting, the things like that. That's important to watch out for. I always recommend that to to all of our customers around holiday. I think and the one that's, critical, I would say the majority of our customers are leaning on this approach is the always on. Everything should be always on, acquisition, retention, retargeting. All of those tactics are really key to keep, sort of iterating throughout the season. But I don't think there's just a few. I think you really have to go big and you have to look at many.
Yeah, I agree with everything Rory said, and I'll phrase it in a slightly different way. We have this really long, protracted holiday season. You can't just concentrate at one moment and another. Like, you have to stay top of mind because there's a longer path to purchase for a lot of purchases. Spend as much as you can. I know budgets are getting rationalized. There may be some marketing cutbacks. Brands that spend into this moment will be much better in this season and in the long run. And I will say, don't just shovel it all into performance advertising. You have to really take that balanced view of branding and performance. I promise you, they work better together than independently. And the brands that can execute that playbook pretty well and maybe, just extract a little bit extra marketing spend from the CFO will end up doing better.
Well, unfortunately, that's all the time we have today. Thanks again to Andrew for joining us with the great presentation, and a very special thanks to Rory and the entire team at Criteo. Our eMarketer production crew, who's been operating behind the scenes, also deserves a huge thank you for making this webinar possible. And as promised, we'll be emailing you soon with a link to the slides and the full recording. Before we wrap up, let me take a moment to tell you about what's happening across eMarketer's media channels. You can register for upcoming live analyst and tech talk webinars at emarketer.com/webinars. On the audio side, don't forget to tune into Behind the Numbers, eMarketer's daily podcast, and you can get that everywhere you listen to podcasts. And finally, please check out our newsletters. Thanks again for joining us, and we hope you enjoy the rest of your workday.